Greetings, everyone. Today we will be solving a question from AS10, which is property, plant, and equipment. In the books of Top Market Limited, the carrying amount of plant and machinery as on 1st April 2022 is 56,30,000. So we are given with our opening amount. On scrutiny, it was found that a purchase of machine worth rupees 21,12,000 was wrongly included in the purchase of goods on 1st June 2022. So we have purchased machinery worth rupees 21,12,000, but this is being included the value of inventory, which is wrong. So we will have to add it back to the value of our plant and machinery. Moving on 30th June 2022, the company disposed of a machine having a book value of 9,60,000 as on 1st April for 8,25,000. So this is the value of the machinery as on 1st April. So this is the corresponding value as on the opening date. We are selling it on 30th June, so which means we'll have to bring it about to the value as on 30th June and find about if there's going to be any profit or loss. Also, the sale value is given, and it is said that there is a new machine which is being acquired in exchange of this said machine that is being sold. The company charges depreciation at 10% per annum on the return on value method. We are required to compute the depreciation, the book value, and also the profit and loss on sale on the exchange of the plant and machinery. So whenever we are given with a problem with a series of events, be it in property, plant, and equipment, or the borrowing cost, we will always draw a timeline so that we can easily pick out the series of events. So we will get started with our timeline. We are given with the opening balance 1/4/2022. The value is 56,30,000. 56,30,000. We are also given with the value as on 1/6/2022. This being the date when we purchased a machine and it was wrongly included as the purchase of goods. So here we have a 21,12,000. Moving on 30/6/2022, we have made a sale and also we have bought some machinery in exchange for it. So the value of it is 9,60,000. This is the machine that we have sold off, but this value is as on 1/4/2022. We will have to arrive at the value as on this date, and then we will arrive at our value of profit or loss. Then we are required to find out the closing balance as on 31/3/2023. So this is a series of events which we are given up. Let us start with this particular date. We have a lot of details given for that. We are also given here that the sale value for which this machine is sold is 8,25,000. So this uses the value 8,25,000. So having written it off, it is very easy for us to find out the profit or loss on this particular point now. We already know that this is the opening amount, and let's find out what is the value of this machinery as on this date. How will we find? How many months have elapsed since the date of opening? We have 4, 5, 6. So 3 months have elapsed since the date of opening, and we are also given with our rate of depreciation. Arriving at the value of depreciation, it is 9,60,000 into 0.1 into 3 divided by 12. So the value of depreciation is 24,000. Let us deduct it to arrive at the return on value. So 24,000 is our depreciation. Minus 9,60,000 will 9,60,000 minus 24,000 will give us 9,36,000. So this is the carrying value of our said machinery as on this date, 9,36,000. But this is being sold or disposed of for 8,25,000. This clearly gives us a scenario of a loss. Let us find out the value of loss. So the sale value is 8,25,000 and the loss is 1,11,000. We will write it down quickly. So we have the loss of 1,11,000. So just by writing the timeline, we have got the first answer for subdivision number 3. We are done with this. Now moving on to calculation of book value of the plant and machinery and also the value of depreciation on to be charged to the profit and loss account. Let us quickly write down what is the book value of the plant and machinery. We already know that as on the opening date, which is 1/4/2022, we had a value of 5 lakh. Sorry, we had the value of 56,30,000. So here we are finding the book value. We had 56,30,000, and then we had some additions as on 1/6/2022. This was not included in the value of machinery and it was erroneously included in the value of inventory. So we had 21,12,000. Moving on, we have also sold some machinery and we have also acquired some machinery. So what is the value of machinery that we have sold? As on 30/6/2022, we have sold machine worth rupees 9,60,000. So this is a machine that is being sold, and we have acquired some machine for a value of 15,65,000. We will quickly write it down. As on 30/6/2022, we have acquired a machine for rupees 15,65,000. But this doesn't end here, because to arrive at the book value, we should also deduct the depreciation chargeable. We will find out what is the depreciation that is to be charged on the said plant and machinery, and then we will arrive at the book value as on 31/3/2023. Moving on to the calculation for depreciation, we are given with the opening and the additions and the deletions. Depreciation to be charged to be entered. Okay, so we are given with the value that as on 1/4/2022, the value of machinery is 56,30,000, and this is going to continue till 30/6/2022, because after which we have a sale. And this is an addition here. There is no disturbance with regard to this plant and machinery, and it continues till the end of the financial year. Let us calculate the depreciation for this opening balance for the period of 3 months and arrive with the value as on this date. So depreciation on 56,30,000 for 3 months. Why 3 months? Because it is 4, 5, and 6. So it is going to be for 3 months into 3/12 into 10%, which gives us the value of 56,30,000 into 3 divided by 12 into 0.1 equal to, it gives us a value of 1,40,750. So the answer is 1,40,750. 1,40,750. All right. Now we know that this particular machinery is going to be carried till 31st March 2023 without any disturbance. So let us calculate the value of depreciation. So depreciation on 21,12,000 for how many months? We are purchasing it on 6. So 6, 7, 8, 9, 10, 11, 12, 1, 2, and 3. So this is going to be for 10 months. For 10 months. So 21,12,000 into 10 divided by 12 into 10%. It gives us a value of 21,12,000 into 10 divided by 12 into 0.1. It uses a value of 1,76,000. So the amount of depreciation is 1,76,000. We'll highlight it. And also it so happens on that on the date, which is 30/6/2022, we have some additions and we also have some deletions. let us quickly arrive at the value of the book value of the machinery on the set date. So, and quickly find out the depreciation thereon. The value is, we have 56 lakh 30,000. We have a reduction because we are selling off a machine worth rupees 9,60,000. We are also bringing in a new machinery which is worth 15,65,000. So this is the value of new machine we are adding, and this is the value that is being sold. So this is our opening value from which we are reducing this, and we are adding it back, which gives us a value of the machine as on 36,2022. So we are adding 15 lakh. So we are adding 15 lakh 65,000. Okay, which gives us the value of 56 lakh 30,000 minus 9 lakh 60,000 plus 15 lakh 65,000. It gives us a value of 62 lakh 35,000. Now depreciation is to be charged on this value for how many months? So this is going to be charged for 7, 8, 9, 10, 11, 12, 1, 2, and 3. So this is going to be charged for 9 months. So we will charge the depreciation on this for the period of 9 months into 9 by 12 into 10%. It uses a value of into 9 divided by 12 into 0.1. It uses a value of 4,67,625. So 4,67,625. So this is also the amount of depreciation to be charged. So we have 3 depreciation which is to be added back. So the total depreciation to be charged to P&L will be the total of all these 3. So this is on the opening till 36, and this is for the new addition, and this is for the date from 36 to the end of the year. So we will add about all these 3 and we will get the total amount of depreciation. So it gives to 1,40,750 plus 1,76,000 plus 467,625. So the total depreciation comes to about 7 lakh. So the total depreciation comes to about 7,84,375. So this is the depreciation to be charged to our plant and machinery. However, in this, it relates to, in this component of depreciation, we also have the component of depreciation for the plant and machinery which was sold. All right. So the value of that particular depreciation for the component of machinery which was sold off is here from our timeline. So it is 24,000. So this component of depreciation relates to the plant which no longer exists in our books of accounts. So it is to be reduced. So 78,4375 minus 24,000. So it is 7,63,75. So this is a depreciation that is to be deducted from the value of machinery to arrive at the book value as on 31/3/2023. So let us quickly deduct the value of depreciation that relates to the plant and machinery that we still retain to arrive at the value of our book value of the machinery. So the amount to be deducted is 7,60,375, whereas the depreciation that is to be charged, the P&L remains is 7,84,375. Let us quickly deduct this said amount, 7,60,375. Now it's time for us to present the answer for the value of the book value of the machinery. So we had initially 56 lakh and 30,000. We had a new addition which was wrongly credited to the, which was wrongly added to the value of inventory. So it is 21 lakh 12,000. We are selling off the value of machinery worth rupees 9 lakh 60,000. And also we are bringing in an addition of about 15 lakh 65,000. And also the depreciation for the component of machine which we retain and carry forward amounts to 7 lakh 63,75. So the value of machinery now stands to about 75 lakh 86,625. Now we are ready with our answer. So with a simple method of presenting the timeline, the complex question becomes very easier to break it down. Thank you. All the best.